Hello, everyone. Today we continue to study the volume profile, and we have the second part of this small mini course on this indicator. Today we are going to set the volume profile exactly according to the trend. In the last video I told you how to set the volume profile on accumulation, i.e. sideways movement of the instrument when it is in consolidation, range, whatever you want to call it. And today we're going to set it exactly on the trend, either upward or downward. We can only trade on this setup when there is a strong trend. That is, we see either strong buyer's aggression, and the buyer pushes the price up very strongly, or strong seller's aggression, when the instrument falls down very well. I found a Cody coin, and it's got a really good one on it. You can see the trends, this one down, this one up, plus. We will see how this indicator works on history, but first we will do it for the future workout of the price of the level that we will build on the indicator. If you set the volume profile exactly on the trend, you can notice that the instrument accumulates very few volumes during the trend. That is, here we will most often see such spans and such small accumulations. I mean, we've also got a big blowout. Why? Because when a big player pushes the price up, he does not have time to accumulate an additional position or add funds to his position during the trend. So when we're flying, he hasn't had time to do it, so he does it in advance in the most lateral motion, in the most lateral accumulation. Accordingly, not such a large amount of volume is accumulated in trends, and the price moves quite distributionally fast, because when it comes out of accumulation, it moves quite intensively. But inside the trend we have exactly those places where the price starts to move much slower. For example, here we have more distribution, that's where the trend is coming from. So starting from the 0.0813 volume shelf, here we start to grow more distributively. And here, for example, we slowed down a little bit, meaning we got little accumulation bars. This is where the mechanics of the market play a role too. So either we're distributively moving or we're slowing down. And here we see that we have this, here we have this, here when the trend slows down, then, accordingly, the big companies can throw some additional funds into their positions. In this case, you and I will look first at the uptrend. Let you and I open up the story and see how that worked out. Look, during an uptrend, the instrument can get into these small accumulations and, accordingly, continuous movement. In this case, into the long. You can use this volume profile right here and stretch it from the beginning of a trend movement to his end here. But in this case you see we have this volume profile from here to the exit at this point. But we have a large number of different indicators. In this case, we can use with you this indicator called Investor P. Here you can look at it, put it in your favorites, so that you do not lose it, and this indicator shows exactly the place that you will open on the chart. So you can open just like this, yet upward movement. And using the indicator to draw the levels that show us the largest accumulation of volumes. That is, in the course of the trend. Here we have a shelf of volumes, right here in the middle of the volume. And we're at 0.1291. Next, here we have a shelf of volumes, This is where we put the 0.1999 level. Subtitles created by D further volumes are reduced, and we have a volume shelf here and a volume shelf here. This is how we have set the levels by volume. And now we need you and I to set, roughly speaking, purchases at those levels. That is, we will expect that when the instrument arrives at these levels, it will bounce from them. Accordingly, I'm going to use the market simulator to cut the chart like this. And you and I will see how these levels work out in the future. I'm going to turn off all the volumes now so we can watch comfortably. And accordingly, we will now see how it all worked out. Here the instrument approached these levels, but there was no rebound from these levels. The rebound came a little later, after, you see, 2 days of pro trading. Only then did we bounce off that level. But here, you see, the volumes are quite close to the high. So if we, for example, let's try to take this volume profile here and see where we have here. And here the level, you see, we have it right here. It's right on the money on the low side here. You see, this volume even worked much better on consolidation than we put on the trend. Next, let's see if we get to our next level. By the way, these volumes here, they also work as support. As resistance, that is, and as support we can bounce off these volumes, and as resistance we can take the balloon you there. This is where we had a rebound. So the tool came in, but you see, it was the spillage from these volumes that occurred here. There was a spill. We went down here heavily in the negative, and only then there was a rebound, but it was a rebound nonetheless. And if we, let's say, took this particular indicator, if we were to take this indicator, here, you see, the volume would even be even higher. Further, we approach 0.1291 and bounce from this point. That is, the levels are quite strong, which are related to volumes. They're amplified several times over. We have a very good bounce from this level. Next, we retest that level and bounce back up again. In general, levels are worked out. Worked out and quite well. We have had good bounces from these very levels. What's the catch? The point here is that yes, it will work out the level as support, as resistance. But if you put these levels on the volume shelves on an uptrend, you can only take long positions. On upside bounces, which means longs only. That is, if you take a long, you can only take a long. That is, a short, for example, from this level should not be taken in the opposite direction. That is, if on an uptrend, we are the only ones taking the longs. If on a downtrend, we will only use shorts with you. Let's find some downtrend with you and set up a volume profile on it. Now we take this volume profile and we take it in this way. You see the largest volume we had here, then we have here, and then we have here, and then we have here in this way. So now we remove it, and then we will take only shorts. That is, we will wait with you to take a range of prices, but only some damn positions immediately set up to make you understand if we have made a converging trend, put levels on volumes, we take only chart positions. Okay, well, let's see. You see, at this point, based on market mechanics, there was a breakout. There was a very small pullback here at this point, but it was a 12% pullback. That is, if even from here to take shorts, roughly speaking, to trade intraday, not in the average term, but just intraday, then there was a pullback. There's been a little bit of backlash here, too, but it's just a little bit. Here by market mechanics it was all to the breakdown, not to the rebound. Let's look further. There was a very strong breakdown of this level. So you see, with a false breakdown, we came back under this level, retested and went down. A very impulsive distributional breakdown has occurred here. So, this is where the retest occurred and we rolled back to short. That is to say, the volumes were already better protected here than here. If it were to come out here, of course, it would knock out at the stop, for example, our sale. So here, you see, you could re-enter, of course, and trade it as a false breakout with 2 bars, for example. But again, you can't purely use some indicator. This way, you still need to look at some additional prerequisites. If the instrument is pulling to continue longing, yes, what is the point of going in on a rebound from this level, for example? If the instrument flies very sharply and breaks the levels above the pen pizza, you should wait and trade away, for example, a false breakout. Again, some additional knowledge is needed. You can't just take volumes and start poking around the market and trading. Here, of course, in addition to, for example, some specific levels. For example, we trade corrective bounces, and this indicator fits us very well as a complement. Therefore, when we, for example, trade a certain trading strategy, even on a level breakout, we can use a calm horizontal volume indicator, and, accordingly, already. Watch and see how we will work out the levels, whether there will be any spans and so on. For example, we see that right here, for example, volumes are decreasing. Accordingly, the instrument may very strongly fly to its previous extremum here. And we realize that if we take here on a breakdown of some level, we will fly away very well. So this is the second way to set the volume, looking exactly at the trend. But as it turns out, to put a volume profile separately on some accumulation is much better, because, judging even by history, it works much better. That's the kind of information we have today. In the following lessons, you will learn what other ways you can set volumes. I will also tell you what types of horizontal volumes there are, what types they're divided into, and tell you about some trading strategies. Quite interesting. I'll talk about levels of open interest. So subscribe to our Telegram channel, watch our YouTube channel, give everyone likes. For now.